Hello, everyone. Welcome to another wild week in the wild west. When I say wild west, I really mean Wall Street. A lot of money was raised by the U.S. Uh, Treasury. They issued $32 billion of bonds, 10-year bonds. That's the biggest auction ever, and it was done at the lowest yield ever. So you got the lowest rates, and you got this tremendous demand. And one of the commentators said the auction was rated an A. In other words, no problem raising the money, no problem. And so that I think that funding was done around point 0.7. I'm not exactly sure, but the rate today, a few days later, is a little lower. So what does that tell you? They can raise money. Uh, they're printing money like there's no tomorrow. They're raising money, and they're raising money at unbelievable rates, and there's demand for it. So maybe there's still here another flight to safety. Uh, with really low rates, it's hard to imagine too much going on. Too much going on of a growth nature. That's how I would look at it. Uh, Retail sales number came out today. They're expecting minus 12 month over month, minus 12% month over month. The number was actually down 16.4%. So worse than expected. That's not a good number. Ever since they've been tracking this data, this is the worst number. So, again, more numbers. And then, they had an interview with the head of Boeing this week, and he went to the market a couple weeks ago, and I think we commented on it, looking for 15 billion. He got 25. So he's funded. He's in good shape for I don't know how long, but they're burning all kinds of money. And he said that if at current rates of capacity for air travel at this juncture, he thought it made sense that one of the major airline companies would not make it. And there's four majors. And remember, Warren Buffett, the brilliant investor, he divested himself of all his airlines a couple of weeks ago, and he made mention of it. So we're just trying to keep track of some of the things we've talked about, put them together. I do want to talk about gold for a minute, because gold, I think right as we speak, is within 1% of the 6-year high that it hit a few weeks ago. So here we go again, talking about, rates are really low, which is bullish for gold. You got lots of uncertainty. You got the specter of either inflation or deflation, which is positive for gold. And I'll put up the GLD chart later, and you'll see it goes almost from the bottom left of my computer screen to the top right. Gold's doing its job. Gold's doing its job. We got a chart here, a year-to-date chart of the major gold ETF. And all I want to say here is, in this crazy time where no one can predict anything, gold is moving up. It's moving up. And if you look where we're at right now, we are as high as we've sort of been. We're mid 1750, 1760. I think we briefly touched 1790. But, all in all, if you had all your money in gold bullion, you're sitting pretty at this stage. Okay? So that's all I'm going to say there. Now I want to quickly go to the S&P, and I'm going to put up a 3-month chart. There's the infamous crash. And here we go. And again, this is just, we've been talking about this every week, but as you can see, we've come down here from this all-time high. So we've gotten about halfway back. That doesn't look like a V. This would be a V. Okay. Now it could still, do this. There's no question. Is that going to happen? I think as time goes on, it's unlikely. So 1 year chart of the 10-year Treasury note. Rates were a year ago 220, and now 0.6, 0.65. Rates are at historic lows. The all-time low was right here. It looks like 0.3435, shot up quickly to 1.2, but here we are. We're just crawling along the bottom. Why don't we take a look at Boeing? It's in the news all the time. Here we go. This is from the beginning of the year to present, 5 months basically. And this company, which is a behemoth, and there's only a couple of major companies that make aircraft. This is one of them, and the other one's Airbus, I believe. But look, this is right around the corona problem. Look at this. But unlike, a drop of 30% for the stock market, this thing dropped from 3.25 down to 100. That's 60. That's like 2/3. That's like 70-75% of the value gone. And since then, they had a little dead cat bounce. But look at nothing. And they just went to the market looking for money, and they were looking for 15 billion. They got 25. Now there's an interest rate associated with that, so I think it's 5% or maybe 5.5%. 5.5% of 25 billion. It's over $1 billion a year. They got to come up with interest. I mentioned last week some of the juniors have started to catch some bids. I'm going to mention a couple here. Datametrics is one with a COVID solution. Look at this. This has got nothing going for it. And all of a sudden, something's going on. Look at the volume. Back in here, shoots up from basically 2.5 cents, hits 22 cents. And there's some substantial volume in here. And here's another one that I was involved with quite heavily a few years ago. Internet of Things. This thing here is walking along here, doing nothing, and all of a sudden, look at this. From about 0.5 cent to a penny, in here we're looking at 5 to 6.5. It's corrected, but it came out with an announcement today, trading millions of shares. Galani Gold, which is a company we talked about, a small producer, but with the price of gold where it is, it's throwing off some pretty serious cash. So look, this is going back a year, it looks like. Is it a year or is it? No, since the beginning of the year. And it dropped here. The gold did have that correction, but look at it, back here to almost all-time highs, 10.5, 11. This thing's throwing off a lot of cash with gold here. If they keep producing the way they're producing and the price of gold stays where it is, this thing's going to throw off, I believe, somewhere 4, 5, 6, 7, 8 million bucks, maybe 10 million bucks in a year. That's a lot of money for a small micro cap gold producer. And then they can use that money to explore. There's another company, Rupert Gold, and they announced a hell of a hole in Finland, of all places. This just happened in the last few days. Stock was 75, 80 cents, and then somebody started to get wind of what was coming. Look at this, all the way up to $1.75. Next week, the June oil contract is going to expire. Now, if you recall, a month ago, the May contract expired and it went to negative $40. And I remember talking to some people in Calgary, and they said, well, that's probably going to happen again in June. And I kind of thought, well, everybody and their brother probably thinks that oil is going to crap out again. And you know what? Everybody probably got short the June contract. And now look at it. It's close to $29. So it was at $5 a month ago, 20 or 22 days. And here it is, $29. And look, the Baker Hughes drilling report just came out. I believe, let me just check my notes here. Yeah, there's only 258 rigs drilling for oil in the United States. That's an historic low. So, if they're not producing any more oil, remember, 5 months ago, the United States was the biggest oil producer in the world. That ain't the case anymore. That's it from Investment Center Central. Investment Center Central? That doesn't sound good. Anyway, that's it for the week. We'll see you next week.